crucial results, as I said, have started pouring in. Let's quickly run through numbers for Wipro. Wipro came out with its quarterly earnings just about a couple of minutes ago, Suyash.
Yes, Shweta. So the first draft of the numbers that I can see, I mean, it looks like Wipro has missed the street's expectations. Revenue figure came in at around 22,395 crore in the in Q2 FY24 versus expectations of about 22,760 crore. Now this is 1.6% lower than our estimates, and on a quarter-on-quarter basis, it's about a 2% decline. Now net profit, Shweta, declined by about 7.7% on a quarter-on-quarter basis. Also, it is lower than our expectations by about 2 to 3%. Net profit came in at 2,650 crores. Versus 2,870 crores in Q1 of FY24. Margin, which we were expecting at around, to improve by about 90 to 95 basis points on a quarter-on-quarter basis, also came in lower than what the expectations were. Margins expanded by about 10 basis points on a sequential basis and came in at 16.1% versus 16% in the previous quarter.
All right, that is, of course, as far as Wipro Q2 results is concerned. Kranthi continues to be with us. Kranthi, what are you making of these numbers?
Yeah, Shweta, I have not got the time to look into the numbers in a detailed way, but what I can sense is the pressure we can see from all the IT majors, the margin pressure we can see, and also the guidance is quite weak with respect to the all the IT companies, which are the bellwether IT companies are concerned in India. What we can sense at this point of time, Shweta, there is a order book visibility. The TCV value, the order book winning value is strong, but where the problem is the execution. The vendors, the companies are taking time to execute the orders at this point of time. That's where the pressure is coming on with respect to the revenue, and there is a spillover effect. And as this spillover effect has been creating on many factors. One thing is IT companies always try to keep the workforce on bench, or they used to go to the campuses in advance, and they used to recruit the human resource in advance prior to their completion. But right now, the companies are not going to campuses at this point of time. In fact, what we witnessed in this quarter is the workforce came down among all the major IT companies are concerned. So it shows some kind of skittiness with respect to the businesses are concerned. Probably it might continue for another couple of quarters also, it can be possible. So we need to understand these numbers. But the other side, as Suyash in his introduction of the market today, is mentioned US economy, the numbers are coming one way strong. And in fact, in US economy, one of the key causes of concern is the inflation. What does it reflect? One way is a strong growth. The US economy is going strength to strength. But the cause of concern is when this growth will take a pause because of the measures taken by the Federal Reserve, and what kind of impact it's going to create on the company's individual earnings in the coming future. That's where there is a dichotomy with respect to the order winning and order execution is concerned. That is a key cause of worry for major IT companies at this point of time.
Now, Kranthi, we also have some guidance coming in from Wipro. Now, the IT services company expects revenue to fall in the next quarter by about 1.5% to 3.5% in constant currency terms. In dollar terms, it will be in the range of about 2,617 to 2,672 million. Do you think this will be a major dampener for the stock in the upcoming trading session?
Actually, it can create some kind of pressure with respect to stock price is concerned in the coming session. And given the kind of selling pressure what we have witnessed today, it can create pressure on the company. But one thing is, if you see the stock price, it's already in a range bound, Suyash, from quite a long time. The stock has been hovering around the 400 level quite a long time. We can say it is forming a base over there. So there will be some kind of impact on a negative side, but I don't think so. There will not be any great extent. There will be a pressure on the stock price is concerned because the stock has been in this range. It got stuck up from quite a long time.
Now, Kranthi, to your point, I was just looking at the price charts. Wipro has actually underperformed all other three peer companies in terms of returns on a 1 month basis as well as 6 month basis. Even it has underperformed Nifty IT. So, do you expect the returns to be muted going forward? And if you take the entire IT basket, at least the top 4 companies, what would be your preferred bet?
Yeah, it's Wipro. We can consider this as a high beta when compared with the other bellwether companies are concerned. The preferred bets are at this point of time is it all depends upon the risk appetite of the individual investor. Okay, the less risk averse investors, they can first the priority is TCS and they can go to Infosys, and those who are the risk appetite high investors, okay, they can do HCL, and in this list one can have high patience, and one can take the one if anyone have the high risk appetite, Wipro, but there is no hurry. There is no need to go and jump and buy these stocks immediately. One can buy in a staggered manner. What happens is these IT stocks have a typical tendency. If you expand the territory for more than 5-10 years, these stocks are outperform the other benchmark indices. That's the beauty of these IT index. They have a strong business model, strong cash flows, but right now they are in the earnings looks very murky at this point of time. So that's where the real pressure is coming with respect to the IT stocks are concerned. And when we interact with the mid cap have not started for the earnings. When we interact with the mid cap IT companies, they had a very dream rally despite of the underperformance of the large cap IT. It's a complete divergence between the mid and large cap IT companies because of the specific domain they operate, because of the geography they operate. Mid cap IT companies are quite optimistic when compared with the large cap IT companies at this point of time, Suyash.
Okay.
Now, the guidance also coming in, we have seen Infosys cutting down its guidance for the full year revenue guidance. We have seen HCL Tech cut its guidance. In fact, Wipro has also cut its Q3 guidance. So, in lieu of that, do you expect FY24 at least to be a difficult year for the IT companies? If so, when can we expect recovery from the IT pack?
Yeah, Suyash, you nailed it actually. Okay, yeah, the as per the if you understand the from the commentaries from the management, it seems to be next 2 quarters. That means the FI 23, the financial year can be a challenging quarter for the majority of the IT companies. But one thing is the long-term horizon investors. Okay, it might be a 6 months underperformance, and market is always a forward-looking animal. It tried to discount the future growth, and it tried to uh, give the underperformance also immediately. So the longer term investors, okay, who have the patience, they can selectively they can choose the stock selection
Right.
at this point of time,
Okay. You know,
given the kind of strong
right.
business models they have.
You also briefly mentioned, since we're talking about Wipro specifically, you mentioned the total contract value of Wipro also remains high. There are large deals that have not been executed just as yet. How confident are you about Wipro, given that Wipro results are in fact far away from expectations when compared to other peers? The other bellwether peers seem to have done much better.
And also, I mean, Wipro has not really landed any major deal in the quarter gone by. We saw TCS land deals, I mean, long-term deals for sure, but deals worth billions of dollars. Infosys also, HCL Tech as well. We did not hear any announcement from Wipro. So, is
So
TCV going to be a concern?
And where are you placing, Wipro?
Yeah, Wipro will be in the bottom list of the stock selection, but in fact, right now it's not the preferred choice immediately. We will wait and watch for the further commentary from the management how the things are going to pan out. In fact, we can witness the same thing with respect to the stock performance is concerned, Shweta. But what we can sense from all these commentaries from the managements, altogether all the large cap IT companies, the majority of the segment-wise income is concerned, the banking and financial services. That's the major vertical for majority of the companies of Indian bellwether IT companies are concerned. That's where the problem, okay, where the subsets like wealth management, investment banking, this is the high margin businesses. That's where the pressure the IT companies are witnessing. Some kind of solace is coming with respect to the healthcare and engineering. This is the segments which are doing well. In fact, healthcare is giving some kind of support, but banking and financial services, that's where the major deal wins are not coming at this point of time. And it seems to be the pressure can be continued for at least for a quarter. We need to see the fourth quarter. Traditionally, fourth quarter can be a strong quarter, but given the kind of management guidances we can see, there will be challenging times for the IT major companies are concerned going ahead. Shweta.